Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can cash in on the current economic explosion that's been occurring ever since we've really hopefully defeated the COVID. And as a result, the markets have been exploding. If you watch the indexes over the past year, well, actually more like 6 months, you can see how things are just taking off. Businesses are doing much better. I realize there are some still outbreaks and possible COVID things that are still going on, but I don't see an end to this. I think we are coming back stronger than we ever have before. So I want to thank you for taking time out to join me this evening. My name's Michael Guess, and I'm going to share with you how a rules-based Boolean logic mechanical trading system will completely replace all that subjectivity in your trading and enable you to safely cash in on that current economic explosion and achieve what I believe is the real holy grail of trading itself, and that is consistency. So with that being said, that's me. And again, I want to thank you for taking time out of your day to be here. I want to let you know what you're going to enjoy this evening, what you're going to come away with. First of all, we do know that the economy has been coming back strongly due to the vaccine. There's a lot of pent-up spending pressure. And of course, there is still some time to try to catch all of these big trading opportunities. Now, I know there's some naysayers who are saying, oh, we're in a bubble. But nobody knows when and if that bubble may or may not burst and we may get a correction. But you know what? The beauty of this system is it works equally as well going down as well as it does going up. It is not biased in either direction. So why am I qualified to make these claims? Well, I've been a professional day trader now for about 28 years. I founded TradeSafe more than 20 years ago, and I've graduated more than 4,000 students along the way. Now, before we try to get going, I notice somebody's already typing something, and I appreciate that reminder. I want to make sure that you can see and hear what's going on, because GoToWebinar has had some issues over the last 24 hours. It cuts in and out. Would you please do this for me so you can ask questions anytime you want? Look in the top right corner of your main monitor, and you will see that little vertical strip with a few buttons on it. Look at the topmost button. I believe it's yellow with a left pointing arrow. Click one time on it and it'll slide that whole affair over to the left and it'll reveal a hidden window. You can toggle it back and forth to free up space if you want. But in that window, that's where you type your question. What I'd like you to do is type something from each of you and let me know that you can see and hear what's coming across. So would you do that for me? I got it from George earlier, but I need it from Lou and others. Okay, thank you, George, but I need to know that Michael and Robert and hey there, Grady. So maybe you'll be back in town after your trip after the weekend, and then we'll be looking to get together again. Okay, Lou says the sound is breaking up a little. I can't control that. I have no control over the webinar service that we use. And as some of you may or may not know from the news on this evening, the 6 o'clock news, there was a major internet outage today, and it affected a lot of things. So that could be what's going on right now. Okay, I don't want to waste any more time on this. Let's just go ahead and keep moving on. I'm sharing with you some of my credentials, if you will. Along the way, yes, I've graduated a lot of students, but I've also spent quite a bit of time creating custom indicators, mechanical trading systems, and I'm going to share one of those, just one, with you tonight, the TradeSafe Day Trading Mechanical Trading System. And last but not least, before I even got introduced to trading almost 3 decades ago, I was a psychotherapist. And I didn't specialize in fixing broken people. I specialized in what we didn't have a name for back in those days, but now we call it performance coaching or life coaching, if you will. And I am bringing that to the table so that I help any and everybody who uses my system. That's right, it's not just going to be software. As you'll find out later through the presentation, you're going to get soup to nuts, a whole array of tools and support mechanisms to make sure that you do succeed. Okay? So feel free to type any questions along the way if you wish, and I'll do my best to answer them. But I want you to know that this is being recorded and that we will send out an email later on tonight. This is, of course, starting at 7 o'clock Central Time, 8 o'clock Eastern. So that means that some of you may be heading for bed by the time that hits your email box. Be sure and check it in the morning. It'll have a link or two in it. One of them, of course, will be to the replay. And I really encourage you to watch the replay, particularly if you have to leave early or if you came in late and missed some of it. Now, as a bonus, I'm giving you a free ebook so that you can get a taste of how the system works. It's carving out a piece of the system, and it'll be in that ebook. You'll get that also, a link to it. But there will also be a link to how to reach me. That's right. Instead of just trying to type out questions, that's tedious, right? You can actually have a full hour of my time, and it won't be a sales call. You're going to get to talk directly to me, the developer. And I'm not going to twist your arm or pressure you in any way whatsoever. I will be there, though, to answer your questions candidly. My goal is just to have you come away feeling your time was well spent and that you know for yourself, is this trade safe really for me or not? And I'm more than happy to also help diagnose any problems that you might be having with your own trading. No obligation, no strings attached. So you can't beat that. Now, before we dive in, this is just a little bit of boilerplate. I'm not going to read it, but it boils down to two things. The FTC, they control the internet, and they basically say one thing about guarantees and promises. They say you are not allowed to promise or guarantee any outcome, whether it's you're going to lose weight or you're going to make money in trading. It has nothing to do with trading. It just has to do with no one's allowed to make a promise. And I can tell you, there's a lot of vendors in my line of work that do make those promises and they do violate the law. Well, I won't do that, but I will share with you my track record as we get into the presentation so you'll have a solid idea of just what you can reasonably expect. Okay? Now, the other thing, of course, is aimed right at those beginners, and there may be some of you in the room who are just starting out. Please remember, don't trade with money you can't afford to lose. That's it in a nutshell. So let's dive in. If you want to cash in on this economic explosion, where do you start? Well, I'm going to show you some things this evening that will help you at least know how to get some traction and proceed safely. First of all, you're going to want to know, well, what kind of a tool is going to give me the best results? I know there's thousands and thousands of ways to trade the market, and I'm going to just introduce you to what I believe is a very safe, consistent, mechanical, automated tool, which takes the guesswork out of all of your trading. And I'm going to also show you how you can get started if you don't have much money to trade with. If you have a small account, I'm going to show you how you can actually start making money. You do not need $25,000 to start day trading the stock market. A lot of people think that's what you need. I'm going to show you another way to start making money because there's plenty of options out there, pardon the pun. I'm also going to show you how to completely eliminate all of the doubt or guesswork you might have about when and where and how to get in and get out of those trades. Because let's face it, probably 99% of what's out there today is subjective. It's got discretion. And that means that what looked really good from that guy in the webinar, the guru you were watching, you weren't able to duplicate it and you spent your money and now you feel burned because you can't replicate it. My students do achieve it, as I will show you. Now, I am going to also show you, because we hate losing, right? Well, we are going to lose some. But when you do lose, I want you to know that you're not going to lose very much. It's going to be a very, very small amount. And of course, to get into those trades without any guesswork, I want to keep it as simple and clear as possible. It'll be a real easy, precise 4-step entry. And once you're in the trade, let's let automation take over, because if you've ever tried day trading before, especially recently, there's been quite a lot of what is called volatility. There's a lot of order flow. Things happen quickly. Well, it's really hard to mouse around and keep up and move your stop and do things. So wouldn't it be nice if you had automation? Well, I'm going to show you with my charts. I'm going to replay an actual trade that we did take, and you'll see how the automation works. All of this adds up to what my students, every single graduate for the past several years, have achieved when they were benchmarked and graduated. Without me telling them where and when to get in and get out, they got nearly 9 out of 10 winning trades. So if you would like to duplicate that, then stay tuned. Dimitri, are you able to hear me now? Type yes. You type no sound. I'm not sure he's still able to. Okay. Again, folks, I can't help with the internet. You know, we've had problems on the internet today. I've already covered that earlier. So now, here is a big objection. You've heard me say the word day trading twice. Now, that may have turned some of you off. A lot of you say, well, I can't do it, or I don't want to, or I've heard bad things about it, or who wants to sit there all day long and get a sore butt and eye strain and brain fog? Well, guess what? You can actually take your time and do it part-time. You don't really need to stay glued to that screen all day long. Part-time trading is absolutely a possibility with the TradeSafe system. Why? Well, look at that camcorder over there on the right. It has a zoom lens. It allows you to zoom back and see the wide angle of everything you're looking at. Okay, George is just typing. Okay, I'm going to interrupt what I was saying. George is recommending for those who are having problems with hearing or seeing what's going on, close all your other applications, close all your other windows, just leave this presentation as the only thing going, okay? That will free up some resources on your computer. So to continue, that lens on the camcorder, thank you, George, has a wide angle, lets you see the big picture, and as you zoom in closer and closer, you're getting more and more detail until you're all the way up really close, and you are seeing all that granular detail that you want. Well, you know what? We can duplicate that with our price charts. You can anticipate what the market is going to do for at least half the day and maybe the whole day with a higher chart setting. That's your time frame higher setting. And it's not just some generic setting from a drop-down menu. It is going to be a very specific setting, and I'm going to introduce you to a formula. I'll give it away for free. It's part of my system, so I'm going to give it to you so you can try it yourself, so that you'll be able to achieve the equivalent of zooming out and zooming in instead of just using those generic drop-down menus. So by being able to start with a higher setting, you'll see what the potential for trending is for at least half or a whole day. Zoom in about 300%. You'll see what I call the dominant cycle of the day. And that's going to give you about an hour to 2 hours worth of potential trending behavior. And then if you zoom all the way in when you're ready for a trade safe setup, then you have what I call the low risk surgical entry setting. These 3 basic settings allow you to adapt to what the market is capable of giving you. And it's all made possible by what are called ratios. Ratios and cycles, I'll use the term interchangeably. This enables you to avoid that one-size-fits-all approach. Don't use a single chart, please. You want to use dedicated charts for each market you look at. The big chart on the left, that's the highest setting chart. It's in a downtrend. If you zoomed in 300%, the middle chart, that's your intermediate setting, and another 300% zooming in, that's your low risk surgical entry. A lot of granular detail there. By having this, you can custom tailor the way you want to manage and exit your trades once you're in a trade based on what is called the strength of the trend. Sure, we all know that indicators are out there. You can buy them, and I have a trend indicator in my own system, but nobody else is showing you how to gauge the strength of the trend. It's one thing to say it's an uptrend or a downtrend. Very few even identify congestion, which we do. But how about if you wanted to know, gosh, if it's a strong trend, I'm going to swing for the fences. A weak trend, well, I don't know, maybe just kind of bunt and get on base, so to speak. It's all based on what the market can give. So these ratios are going to enable you to do that. Now this system, the trade safe system, will work on any market as long as it's trending. Okay, if it has a trending personality, and by the way, hate to break it to you, just like you and I, we have personalities. Markets have personalities. Some of them tend to congest a lot and break out and fake out. Things like gold, they don't trend really well. They tend to congest and break out and fake out. Crude oil, same thing. Other markets do have trending personalities like currencies or the indexes. And I'm going to use the indexes as an example. The indexes, of course, are the S&P, the Dow, the NASDAQ, and the Russell. Now, the stock market is out there, and you can trade stocks, of course, but gosh, which one of 12,000 stocks do you want to pick? You may say, well, I'll pick the ones that I like. Okay, fine, but they may not be the best candidates. Plus, you'll have a $25,000 entry fee, if you want to call it that, to be able to open up a day trading account. That's the minimum requirement the SEC requires. And that's a barrier for a lot of people who don't have much cash. And also, they have a lot of other minor restrictions I'm not going to get into tonight, and things like uptick rules and so on and so forth. And lastly, you get beaten up really badly when it comes time to pay the tax man. What if I told you that you could open an account with as little as $500, though I don't recommend that, that's too little, and that you could buy or sell without waiting for upticks? It was much simpler, much cleaner. It's still regulated, just like the SEC does, except it's the Commodities and Futures Trading Commission. That's right, commodities and futures. And that's where the minis live. The indexes are, yes, they're still traded in the pits, but that's a dinosaur. The electronic version are called the minis. And that's what I'm going to use as an example here this evening. Keeping in mind, this system wasn't created for commodities and futures. Yeah, I'm just using them because they are so easy to trade. Anybody got a question about that? Just type it out. So now recently, and some of you may not even know this, the closing time in the afternoon for the exchanges, which was when the pits closed, was Central Time, because that's where they're located in Chicago, not the East Coast. These commodities and futures are all located in Chicago predominantly. So they opened at 8:30, they closed at 3:15, and that was 405 minutes worth of trading time. And that was the beginning of this master number that is a formula I'm going to give away and teach you right now. But let me circle back. The exchanges extended the time before they would say the close occurs. They extended it from 3:15 to 4 o'clock. And I went, oh my gosh, I'm going to have to recalculate this all over again. Guess what? This still works. This 405, the number of minutes, still works. And how do I know it? Because if I put, and this is included in my system, I have an automatic indicator that on the opening tick will plot all the major support and resistance levels for a daily chart. That's the number of minutes, 405, all the swing high and swing low pivots, if you will, and stepping down to the next smaller and smaller integers. So what's the next biggest number that divides into 405 without a remainder? It's 135. Next one down, 81. Next one down is 27. You are seeing a 3-to-1 ratio there. And if you keep that 3-to-1 ratio going, you're going to end up with these three settings. These are the chart settings you want to use. Now, you may be using a piece of software right now that lets you see the market in real time and even day trade, but maybe it won't let you change the settings to something custom like a 9-minute chart. Sure, it'll probably have a 3-minute setting as a default and a 1-minute setting assuredly, but you probably won't see a 9. This means that your software is amateur software. No disrespect, but I live in Austin, Texas, and in Texas we have this saying. It says, don't take a knife into a gunfight, and you do not want to be low on the food chain. So for that reason alone, even though I started out about 20 some years ago with TradeStation doesn't quite have the horsepower that NinjaTrader does. NinjaTrader is the platform that is both easy to use and enables me to program the automation that you're going to see a little later when we go to the charts. So your software needs to be able to have these three settings if you're going to try to trade the minis. So 9-minute is your wide angle setting, 3 minutes your intermediate setting, the 1 minute is your low risk surgical entry setting, and that keeps a 3-to-1 ratio important. It's very important. Now, you heard me say volatility about 10 minutes earlier. There has been quite a lot of activity in the market. They're very excited, overexcited, in fact. That's too much volatility. Kind of like Goldilocks and the Three Bears, you want it just right. Well, sometimes we've had too much volatility. You know what that does? It means that when I get a setup bar on my 1-minute chart, that bar is typically bigger than usual. Well, we have limits on the amount of risk that we're allowing. And we don't use a fixed amount of risk, a fixed dollar stop as it's called. We use something called a logical stop, and it's based on the range or size of the bar that is setting us up for the trade. So if that bar is too big and it exceeds the amount of risk that we can have, and I'll cover how much risk we have for our various trade exits a little bit later. If that 1-minute bar is too big, does that mean we just can't take trades during volatile times? No. We actually offer you some additional entry opportunities by switching over to tick charts. Now, some of you may not even know what a tick chart is. I don't have time to go into that this evening, but instead of time and price, think about it as something roughly like volume and price. So many trades occur, and during that period of time, however long it takes, it may take a second or two, it may take a minute or two, but 144 trades or 233 trades, for example, and boom, the bar is finished. That's a tick chart. They're very smooth, they're very predictable, they're very easy to trade. So now that I've shown you the formula for how you can do this for the indexes, I want you to type yes if you think you understand how the formula works so you can try it out on any other market that you want. Give me a little bit of feedback. Let me know. Great. Excellent. Thank you, George. All right. Now, it is one thing to detect trend, as I said, and there's loads and loads of trend indicators out there. But I'll tell you what, I can't tell you how many people that I consult with before they join TradeSafe tell me, oh my gosh, I sure hope your system keeps me out of congestion in CHOP, because I'm always taking trades when I think I'm in a trend or my indicator says I'm in a trend, but I'm really in congestion. How reliable is your method of keeping me out of trouble? The TradeSafe system will keep you out of trouble. It will not let you take a trade when there is no trend. Look at that screenshot there at the bottom. Sure, you can see the price bars, and no, I don't use candlestick theory. I only use candlesticks because they're easy to see, so don't get excited about candlestick theory. But look at the bottom of that screenshot, and you'll see two basic colors, really. The green color, and that signifies that price action up until the end of the green was in an uptrend. When there's no color right after that, we were in congestion. And then we broke out of congestion right here. That's when we went into a downtrend. It was this bar. And then we went right back inside of that zone of congestion. You may say, oh, so that's what this rectangle or box is, huh? Is that all of that congestion? No, 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 it's not. It's merely just a visual display that the algorithm is calculating congestion on. It's looking back a certain number of bars and forwards a certain number of bars and doing some various calculations. The actual period of congestion is when there's no color. Dead simple. So you're in an uptrend, no trend, downtrend, no trend, breakout that is confirmed right here, and you're in an uptrend. That means that you get a visual alert by looking at that chart. But what if you're not looking at that chart? What if you went into the kitchen to fix a sandwich, or you got bored waiting to get out of congestion? You don't want to watch paint dry, right? Your computer will talk to you in plain English. It will say things like NASDAQ 3-minute breakout confirmed, or Dow 1-minute new trend change, things like that. It's got a whole variety of alerts, all in plain English, and you'll be told whether there's a breakout, a fake out, etc. from congestion. Now, it doesn't matter whether you're looking at the screen or not, whether the chart is visible on the screen. You may have several charts in what is called a workspace, and it might be minimized or hidden because you're looking at a different market, which is trending. Well, you'll still be notified about those other alerts from what's hidden. In fact, when we go to the charts later on and you listen to me and watch me as I go through my trade, you'll hear in the background my computer talking to me and letting me know various changes that are going on. So you will always be notified about any update in real time, and you don't have to lift a finger. So that is a wonderful thing. I don't think there's anything out there currently today that will do that because, yeah, as George says, chop is the trader's doom. Tell me, I paid my dues in doom time in the years past, and that's what motivated me. This way, you're going to get a real clear signal when it is safe to start looking for a trade safe trade. But you know what? Beginners tend to focus on the entries a lot. And that's normal because everybody thinks about getting in, getting in, getting in. It's the professionals that concern themselves more about where to get out. If you look at that screenshot there, you might wonder where would have been the best place to get out. Well, this would have been an uptrend, as you see it's green down below. And here the market retraced down to this moving average. We'll get into the whys and wherefores a little bit later. And the bar immediately above the big red arrow, that's our setup for the entry. And we would have parked an entry order right above that bar's high and gotten into the trade. Now, because we don't use a one-size-fits-all way of managing and exiting the trades, like we always scalp, some people, that's all they do. Others, they use some other method. We've got 3 different exit strategies depending on the strength of the trend. And I'm going to give away exactly which one to choose to you a little bit later. So I'm going to continue giving away things that you can try out on your own so that you'll have a sense of how the system works. In this example, you're going to take some profit right around here. By that, I mean if you take off half of your position, let's say you're trading the minis and a unit of measure instead of being a share It's called a contract, kind of like options have contracts. And let's say you entered with 2 contracts. Well, half of that position means you would cash out of your first contract right about there. And then what do you do with the rest of your position? You see this trailing stop indicator? I know you know what you think it is, but it's been completely reprogrammed, so it isn't what it used to be. But the point is, as you'll see when we go to the live charts, it self-adjusts so that you don't need to guess where to get out. The market itself will take you out. So that is something that you have to see it, to believe it, to appreciate it. And as I said, you get 3 different exit strategies. They're all predefined, pre-programmed, and it's all based on the strength of the trend. And I'll show you that formula a little bit later so that you'll know exactly how to replicate it on your own. But I will tell you this. It all boils down to really 2 major approaches to how do you want to manage and get out of the trade. If it's a real weak trend, and I'll show you how that's determined, then maybe you would use the baseball metaphor, since it's now baseball season. You would bunt and get on base. That would be a scalp. Okay, you're going to go for a few ticks, and you want to get in and get out with the entire position. But if you got the wind at your back and it's a perfect pitch right down the middle, you'd swing for the fences. Well, that would be something called scaling out, because you want to be able to milk that trade for all it's worth, but you don't want to just bet the whole farm and hang on and then have it reverse, and then you go, oh, shoot, I wished I had taken some profit. Well, scaling out lets you do that. It'll hit an easy to reach target, and then you let the rest of the position keep going automatically. So you've got basically scalping and scaling. And as I pointed out, that trailing stop, the blue dots, will adjust themselves in real time. What does this add up to? Super high probability. You can really depend on this. And when you have high probability, nearly 9 out of 10 winners, you get consistent results. And that's the holy grail of trading is consistency itself. So if we take a symbolic 9-minute uptrend and a 3-minute that's meandering into a slow downtrend, and in a different chart, a 1-minute just started an explosive rally, well, they're all out of sync. Optimally, what you really want, all 3 of them trending in the same direction, either up or they could be down. But you know what? You don't get that all day long. In fact, it's kind of the exception to the rule. So what do? You need some way to gauge when you don't have that and when you do have that, and what settings should you use. So I'm going to show you how to assess the strength of the trend the same way I teach my own students, albeit this is going to be a little bit more simplified. And in order to help you remember, we're going to give you a little rhyme, a teaching mnemonic. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. That means the 9-minute, 3-minute, and 1-minute and/or tick charts are all trending together. Man, oh man, you have the potential for a really strong move, and you're probably going to get a lot of follow through. So you want an exit strategy that keeps you in that trade as long as possible. Swing for the fences. Use scaling out. Okay? Now, what if you don't get that? As I say, it doesn't occur all that frequently. What if only 2 out of those 3 charts or time frames are trending together? And it's not just any 2. It has to be the one you're going to enter on, the entry time frame, and the next higher time frame. So that would be your 1-minute and/or tick chart and a 3-minute chart. This means you have the potential for at least some price movement, but it's going to be a weak one, brief one, so you don't want to stick your neck out. So what you want to do instead is get in and get out after a certain number of ticks. That is a scalp. So ours are pre-programmed, and this enables you to maximize your benefit based on the strength of the trend. So would you folks give me some feedback and let me know, yes or no? That's all I got to ask, yes or no. Do you understand how that works? Does this make sense to you instead of trying to do a one-size-fits-all? Thank you, Isaac. I appreciate it. And Benjamin, great. So if you do all these things, what can you reasonably expect? Now, I told you I'm not going to break the rules of the FTC, but I am going to tell you what you can reasonably expect. And I know we would all love that ruler straight equity curve. You ain't going to get it, but you're going to get as close to it as I think is as mechanically possible. Now, I'm going to keep sticking to using as an example these indexes, the Dow, NASDAQ, Russell, and so forth. And they live in the world of futures and commodities, so we're going to call those contracts so that we're staying consistent. If you don't have a whole lot of money to trade, you can't afford $25,000 a day trade, for example, the stock market, because that's what it costs. That's the price of admission. You can actually start with $500 margin requirement for each contract you trade. So if you want to trade anywhere from, say, 2 to 4 contracts, that would be small size, you would have to have $500 for each of those. Now, if you did and you wanted to trade 4 contracts, you'd need $2,000 to open the account. If your first trade was a loser, you can't trade 4 contracts anymore, right? Because you're below that $500 margin requirement for the 4th contract. So please don't undercapitalize yourself. I strongly recommend that you try to have a minimum account size of at least 5,000. Is that a problem for any of you folks? Give me some feedback. Let me know if that would be hard for you, because generally speaking, a lot of the people who show up in these presentations, you're position traders and you already have big accounts. So I don't think that taking a little bite off of whatever you're using for your position trading to spare for a $5,000 day trading tool in your toolbox shouldn't be hard. Yeah, there you go. All right, great. Thank you. Now, here's the thing. If you start out with a $5,000 account, a lot of people may wonder, because you saw in my emails, I was making this bodacious claim about that you could average about 2 to 4% return on your investment on a daily basis. Now, I've had people tell me you just can't do it. You're a liar. Well, I'm going to show you how you can do it. And it is possible. It is even easy. So here's how. If you take every trade that you get a signal for, yes, that would mean you would have to be there all day long. So I know that defeats the purpose of part-time trading, but we'll address the part-time trading in a few minutes. But just so you understand where the 2 to 4% comes from, if you took every trade all day long, Monday through Friday for a full month worth of trading days, that's 20 to 22 trading days, right? Well, you add it all up and you subtract the losers from the winners and you have that net profit. And you divide that net profit by the number of trading days, 20 or 22. That is going to give you the average daily return in dollars, which I can assure you would easily be anywhere from $100 or $200 and upwards. Where do we get the 2 to 4%? Divide 1 or 200 into $5,000. There's your 2 to 4%. See how it's done? Very easy. Now, some people may say, okay, I don't know if that's going to be enough for me. That's lunch money. I really would like to make at least 500 or more a day to make it worth my while. Okay, if you got a bigger account, obviously you'll trade more than 2 to 4 contracts. I'm just pointing out that for the little guys and gals who can't afford much more than a $5,000 account, we got you covered. Okay? Now, some of you, the math whizzes out there, are running the numbers in your head and you're wondering, this could really add up to a lot of money at the end of the year. Well, before we address that, I want to show the people who don't have much money how you can actually become one of those bigger traders and do it safely. So here's another free giveaway. You start with a $5,000 account. Don't take any money out. Keep the winnings in it, and you let it build itself up to $7,500. That's a net increase of $2,500. For every $2,500 you keep building your account, you're going to increase the size of the trade you take by 2 more contracts. So if you started with 4 at 5,000 and you built it up to 7,500, now you can add 2 and trade 6 contracts. And if you hold everything constant, because you are now just basically increasing the size of your trades, you will reach your next threshold of $2,500 more dollars even faster. And you'll hit $10,000 and you'll go from 6 to 8 contracts, and so on and so on and so on. And as I was saying, the math whizzes probably out there have probably been thinking, oh my goodness. So if I do that, I'm going to end up like Gordon Gekko and be the master of the universe. I don't believe that's possible, Michael. That's like a 4,800% return. I believe you're correct theoretically, but that ain't real. First of all, I do want to address reality. I don't believe in hype. Now let me see what George typed here before I go into this next piece. He said, start small, no matter how much money you have, would be my advice. Couldn't agree more, George. Even if you have the big money in your account, excuse me, you want to start small and you want to let your emotions catch up. See, having been a former psychotherapist, I'm well aware that the last frontier in trading is discipline, trading psychology, and way too many people, they get greedy and jump in the deep end of the pool and they kill themselves. They blow up their accounts. You know, like that Robin Hood thing where all those millennials were blowing up their accounts because they didn't know the first thing about trading. They were just getting in because they were trying to make money on GameStop, and then boom, it was all over in a day. So coming back to what we're looking at here, that unicorn, I don't want to flim flam you. I want you to know, since we started out saying that you can part-time trade, let's back off from 20 to 22 trading days a month. What if we pick something a little more realistic and say 15 as kind of an average? And instead of trading all day long, because remember, you don't want to get a sore butt and brain fog and eye strain. What if you traded a half a day? Well, that would mean instead of $200 a day, it would be $100 a day average winning for 15 days. That means you would end up at the end of the month worth of trading, 15 days worth, with $1,500. Now, a $1,500 return on a $5,000 account is over 30%. And some of you have actually watched presentations of mine in the past, so you know what I'm going to say. But for those who haven't heard it, I just love saying it anyway. There are hedge fund managers out there that would literally kill to make 30% return in a year, let alone in a month. That would be their wildest dreams. We have done that. We've even beaten it in a single day, albeit that's extremely rare. So sure, we all want that ruler straight equity curve, but remember I told you that one of the biggest barriers to consistency is the lack of a mechanical trading system. Well, the other piece is you. You are not a clone. You have a personality. Markets have personalities. Even if I introduce an automated trading system, you're the guy and gal that has still got to pull the trigger, and maybe something's out of your comfort zone and you don't want that trade. So you're going to end up selecting trades that someone else may not want, even though you're going to see the same signal. Excuse me. In the trade safe course that accompanies our system. That's right, we have a full-blown course as well as a trading room and my personal coaching that goes along with it. But before you're allowed to graduate, you got to get benchmarked. You got to create an authentic track record. And by that I mean you need a statistically viable sample of at least 30 trades. And like I said, even though you'll see the same signals that every one of my students might see, based on your previous training and the way you journaled each and every trade in your practice trading up until then, that's right, I give you a pre-formatted journal so that you learn from the losers as well as the winners. You don't be an amateur who just jumps from trade to trade to trade. We're going to give you a highly structured environment to train you. This is exactly what professionals do. They journal. So by the time you've journaled maybe a couple of hundred trades and you finally get to the point where you're ready to be benchmarked, you will have a real clear idea about various scenarios that didn't work. Maybe you've noticed support or resistance levels that interfered with follow through. Maybe volume was a factor. Maybe price was overextended, or maybe something in your guts made you just feel like I can't take this trade. Whatever it is, at the end of 30 or more statistically viable trades, you will then meet with me and have a review. We're going to use a macroed spreadsheet that I provide you, and we're going to break it down, and we're going to find out exactly which chart, was it the 1-minute chart or one of those tick charts, gave you the best result, regardless of the market you're trading. We're going to find out which chart was the one that you had the highest percentage of winners. Then we're going to turn our attention to the exit strategies. We got 3 of them, right? So we're going to find out which exit strategy paid you the most money in your trading. So we're going to dial this system in to exactly your personality. And anytime you try to take on a brand new market you've never traded, you'll go through the same benchmarking process and you'll know how to calibrate yourself to it. Nobody else out there in the entire industry does this except TradeSafe. So let me know if you like the whole idea, the concept of benchmarking. Now let me see what George is saying here. So you learn how to use the system properly, for example, or you notice flaws in your own psychology which led to trading mistakes. Yep, that's it. So I'm working with you in a highly structured environment with a totally structured automated system, and we're building this into your psychology. Plus, as you'll find out at the end of the presentation, I even give you a powerful psychological tool that will neutralize self-sabotaging behavior. Oh, that overtrading or analysis paralysis. So, all of this has been preparing you for what? Let's look at the charts. So I'm going to freeze my screen right now. Now, if you're watching the replay, you'll be able to see what I'm doing. So it doesn't matter. And as soon as I got my charts up, I will turn this back on. All right, type yes if you can see my charts. Nobody can see the chart? Okay, now you can see the charts. Yes, George, we do not want anybody risking funds until they've built an authentic track record. And the algorithms that are being used during sim trading are extremely close to what you would get as far as fills with real dollars. So there will be almost no difference. Okay? All right, so I'm going to give you a very quick tour of what you're looking at. First of all, you may say, well, that's a lot of charts. Are these different markets? No, this happens to be the Dow, YM, that's the symbol. And these are, remember the 9, the 3, and the 1? Here's the 9, there's the 3, and dead center, there's the 1. And if the 1 minute has too big a risk, these are the 2 tick charts over here. This evening, we're going to use the 1 minute chart for our sample trade, so it's real easy for you to follow. And right here, this is pretty important. This little box, this window is called the data box. Wherever I put my cursor, you can see the open, high, low, close. Plus at the bottom of the box, you can see my proprietary indicators, the readouts, which are essential as far as giving you the specifics of the 4 steps to get into a trade safe trade. And what is this window right here? Well, I told you that you both will be able to see and hear all changes in trend, all congestion, breakouts and fakeouts, and so on and so forth. And if you miss something and you want to go back and look, this is the log. That's all it is. It's just a log of all those alerts. Now that you know basically what you're looking at, do we have trend agreement? The best is if all 3 agree. The 9-minute is not in an uptrend. If you put the cursor right here at the edge of the green, notice that there are 2 bars afterwards. So that means that it went right back into congestion. So the 9-minute is not in a trend. The 3-minute is in a downtrend. You see the color? The 1-minute is in a downtrend. So the 1 and the 3, they do agree. Now I have a choice. When only the 1 and the 3 agree, yes, I could scalp, but I could also use one of the other 2 exit strategies. They're both scaling out. One of them is scaling out at when all 3 agree, and you scale out at $100 of profit. But we don't have all 3 of these agreeing trend-wise. So the other scale out exit strategy is we'll scale out at a quicker, easier to reach target. Why? Because this is a weaker trend. So we want to very quickly take some money off the table and pay for the trade at $50 worth of profit. Hope that makes sense. So what we're going to do now that we have trend agreement is we don't have to look at any of this anymore because there are 4 steps to entering a trade safe trade, and I've just now identified the first one, trend agreement. So once you have trend agreement, we're going to focus on only the chart we want to take the trade on, this one. So I'm going to take the window that it lives in and maximize it, and now I don't have so much distraction. Now you may say, I noticed you had all your charts on one screen. What if I have multiple monitors? Then spread them out. But remember, it is a macho thing to try to have too many monitors. You will overwhelm your brain. Multitasking flat doesn't work. The maximum number of monitors that realistically you need is 3. I have 3. However, I'm showing you 1 monitor just to prove it can be done. In fact, you can use a laptop. Yep. Though I do recommend an external monitor that's bigger than a laptop screen, so you don't have to squint. Okay? So we're on the 1-minute chart, and I'm going to drag this more to the middle so we can focus on it a little bit better. And we are in a downtrend right now, right? And what I'm going to do is draw you the direction that that trend is going and what to expect for the second step. It's going to be a simple pullback or retracement. Where is it going to go? Well, approximately right there. You see this moving average right here? By the time we get enough bars that come down low enough and then we start seeing bars heading back up, that's not going to change the trend. That is merely profit taking while in a downtrend. And trading pullbacks in a trend is as old as dirt. I certainly did not invent this, but what I have done is I've brought extreme precision and predictability to the process so that you don't have that subjective, inconsistent problem that other people get when they do pullbacks. Now, once we have the last bar, I'm not going to say how many it takes, but there's a specific number of bars that have to occur, and we want it to be about a 45 to 90 degree angle. We don't want it to meander. So we're putting very clear restrictions on this. And of course, when it gets to where the moving average is, it'll either want to touch it or the bar that is furthest or deepest in the pullback is allowed to come within a certain number of ticks. If it doesn't quite reach it, but it's inside that sweet spot, that zone, that's okay. And how will I know that? Because right down here, as we monitor it, you will see the readout change instead of some idiot light that says, okay, it's over. I want you to know what's coming and plan ahead, which is how professionals think. They don't trade idiot lights. It's like a professional race car driver. They're looking at real gauges instead of blinking lights. All right. Now, the last bar in the pullback, let's say I draw a little vertical line to represent it right here. That is called a setup bar. Then what you want is, after the second step is completed, the last bar in the pullback fulfills its condition, and we'll see it in a little bit. You will want to see this other indicator. See the red line? That's an oscillator. I'm not going to say which one of the family of oscillators it is, but it is an oscillator, and all it needs, like any oscillator, is overbought or oversold. And I don't use turning out of overbought to get us into the trade because indicators lag. I will show you what it takes. You will park an order one tick under the low of the setup bar. So I'll draw a little horizontal line there to represent where that price level would be, one tick under the bar. And we will treat this pullback like a stretched rubber band, and it's built up a lot of tension. And what we're looking for is price action. It may not be the next bar, it may be a few bars later, but however long it takes, when a bar trades through that stop limit order, and it's a limit-based order, so that there is zero slippage, you're in full control getting into the trade, no slippage, that makes the market prove itself. The market has to trade through that order and snap back down. And you're trading that snapback. That's essentially what you are doing. Does this make sense, folks? Type yes if you get it. Oh, George says info overload. Where did you get lost, George? Okay, well, I'm going to keep moving here because, all right, Benjamin is getting it. Lou is getting it. Okay, great. So I'm going to erase this. If you just follow along and watch the actual trade, I think it will make a lot of sense. I was trying to give you some preliminary idea with my poor illustration so that you would see how it, oh, George says he does get it. And he was commenting on using multiple monitors. He can't do that. That would be information overload. And that is the problem, by the way, with typing when you're in a trading room, isn't it? I want you to know right now, pardon me, that my students, when they're in my trading room, they don't have to type. They wear a little cheap headset with a microphone, and you can talk to me anytime you want, even in the middle of a trade, and say, why did you do that? Because I want you to. It's an educational environment. It's not one of those just watch Michael trade and try to copycat. I don't want you to piggyback my trades. I want you to learn what works and doesn't work. And I'm going to deliberately take losing trades in front of you. Yep, I will, in order to show you how to deal with those things. Those guru guys and gals, all they want to do is look good. I want you to learn. Okay, that makes so much more sense, I hope. All right, so let's go ahead and continue here. I'm going to turn things on, and I'm going to speed it up to about 6 or 8 times normal speed. Now watch for the pullback or retracement. You'll start to see the bars moving higher. Not yet, but there you go. Starting to get closer to that magenta colored dashed moving average. Now, when we get reasonably close, I'm going to pause and I'm going to show you how the readout works.
9-minute breakout reset.
Oh, I don't know if you heard that in the background. It said 9-minute reset. It's just letting me know that the 9-minute chart for this particular market had a breakout and went right back into congestion. So your computer's letting you know. Let's put our cursor on this bar and have you look down here and this readout when I do that. It says that it is 3 ticks away. The part of the bar, the high of the bar that's closest to that moving average is 3 ticks away. Notice that we're also very close to getting overbought. So what I'm going to do is turn this back on, and we'll let this keep going until we get the bar that is the furthest in the pullback. Now right now that one would be, but another one just started trading higher, and I'm going to pause, slow it down to normal speed, and get ready to show you what we're going to do. This is the retracement I was telling you about. This bar is actually making contact with the moving average. Look in the data box. I'll bring it up higher so you can see it. And it says 0. That means it's actually touching the moving average. So you will know tick by tick, moment by moment, as you're getting closer to that sweet spot. And of course, because it's rules-based, you will know, as one of my students, exactly what that tolerance level is. We satisfied the first step, the second step. That's trend agreement first step, pullback second step. And now look, we're overbought. We've satisfied the third step. What do you think the fourth step is? It's risk. And it is just like looking in the data box again, where it says risk, pretty obviously. Right now, the risk, and this is on a per contract basis. It's not for the whole trade, because I don't know how many contracts you might trade. So we have it always showing on a per contract trade. That's for the minis. So this is right now showing that it's only $30. That's the most you could lose. However, if you look down here, this is the counter that says on this 1 minute bar, we've got 23 seconds left before it hits 0 and closes. When it gets about 3 or 4 seconds before 0, we want to park an order 1 tick under that bar's low. Okay? Now, what will happen when I do that? I'm going to show you right now. If this bar doesn't grow lower, and it might before it finishes, but for right now, I've frozen the screen. I'm going to actually park an order directly on the chart. You do not need to use what is called a DOM, depth of market, or DOM, as they're called. That's simply a separate window like the data box window. It floats above everything else, and it has an ascending column of numbers and a descending column of numbers, and it's the bid and the ask. It's not terribly intuitive to click on that. Plus, you have to take your eye off the price action. So that's so 20th century. It's last century technology. This will let you park the order directly on the chart by simply right-clicking, and you will see a menu pop up. And yes, there's lots and lots of stuff here, but it's always going to have the orders grouped together, and you're always going to choose the last one. So that makes it real simple. You're always going to go for the last order. So I'll show it to you when we get down to the last few seconds. So here it goes. I'm going to turn it back on with about 20 some seconds to go. And we will keep this 1 tick below the bar's low with 15, 14, 13, 12, 11, 10, 9, 8, 7. Get ready, put it in.
Order submitted.
And let's pause. There you have the actual order. It's so graphical, intuitive, and easy to see. It is showing you exactly where the order is, the price of the order, and the type of order. It's a sell order, SLM, stop limit, and the number of contracts, 4. If you want to kill the order, you click here on the X. I'm not going to do it. We're going to now turn things back on, and we will let this market prove itself by snapping back through this resting order, which is a stop limit order. Order filled, and let's pause because now automation is starting. You will see several sequences of cascading automated features. Here is the setup bar we had. There is the line that was one tick below it. That's where we parked our order. Down here, $50 worth of open profit below it is the target line, where we are going to, since we sold short, buy back 2 out of the 4 contracts. And we're going to do it on a limit order again to eliminate slippage. And what about the stop loss order? That's this red one. Now it's way up there, and it doesn't need to be up there. It just automatically goes to the maximum risk value. For scaling out, the most that you can lose for scaling out is $100. That's if the bar is big enough, because you're going to want your stop 1 tick above the high of the bar. It's that easy. Just drag it into place. Now this is your actual risk, the distance from here to here. Entry to stop. That is the distance. And what was that risk at the time of the setup? Look in the data box, $45 per contract. That's all. So that's all we're risking, and we sure do hope we hit the target. But guess what? We have another algorithm that's working in the background. Even if we don't get a fill here, don't trade through it, because you got to trade through it to guarantee the fill on a limit order. The algorithm goes, oh, we've reached that far? Let's go ahead and hedge our bet. We're going to move that stop loss order where you could have lost 45 per contract, and we're going to move it down to break even so you don't lose anything, but we're even going to move it down 1 more tick to cover any commissions and or slippage. So it's really a cancel and replace. So I'm going to turn this back on, and this is something TradeStation can't do. So let's see what happens here. Maybe if I speed it up.
Target filled.
Okay, I'm pausing. Now, it was too fast for you to really see, but the stop loss order, the red line, was canceled, and it was replaced right here, 1 tick under the line. That was your entry order. And the green line, the target, disappeared because we did trade through it. So you now have $50 in closed profits in less than a minute. It paid for the trade. You can relax, take your hand off the mouse because it's going to do things for you. And what's more is, remember, we started with 4 contracts, and that stop loss order that was up here was for 4 contracts. Once we went through the target and got rid of 2 of those 4, we don't need protection for 4. Notice over here it only says 2. Yes, it automatically canceled and replaced itself again to 2 contracts. It's actually not a protective stop loss order anymore. Technically, it's a profit stop at 1 tick, because if we had not have gone through the target and just kissed it and come back up, we would have hit the break-even stop and we would have made $20, $5 a tick for each of the 4 contracts, and you would have had a $20 winner. So you'd have hedged your bets and you'd have felt still pretty good, at least, because you didn't have a loser. But now we do have a winner of at least 50. And if it doesn't go any further and comes back and hits this, that's another $10, $5 for each contract. But let's see what does happen. Let's go ahead and turn this on, and let me see what George is saying. He says, it does that after X number of bars? No, it doesn't do it about numbers of bars. It has to do with it's a proprietary algorithm. That's about all I can let you know, but it's not about the number of bars. It might take a whole bunch of bars. It might just take the same bar that you, like here, just hit the target. Okay? All right. So here's what we're going to do. We're going to turn it back on, and in the interest of time, I'm going to speed it up to about 15 times normal speed so we don't stay here all night. And I want you to pay attention. I'm going to pause one more time. This is our trailing stop indicator. Now, it needs to be told to associate itself with the stop. Until it does that, it doesn't know what to do. It can't become automatic. So we're going to right-click and go through a couple of drop-down menus. And we're going to go ahead and give it a little offset of 2 ticks above it, because I don't want it to be at where the dots are once it gets past. I want it to be a little bit above it, because sometimes price will kiss it and then keep going. So let's turn this back on, and notice that this is hanging back because we're dropping at a really good rate. It's like a surface-to-air missile. It adjusts its rate of closure and trajectory.
Congestion canceled.
And in the background, the 3-minute was canceled as far as its congestion, but that's okay. Notice we almost got tagged right here, but so far, things haven't moved. Every 60 seconds, and of course I'm on super fast speed, every 60 seconds, one of these dots will appear, and it will adjust itself based on how the market is behaving. If it loses its momentum and goes sideways or even backfills, and I'll just restore the auto scaling.
9-minute breakout confirmed.
And it's letting me know that on a separate chart, the breakout is confirming. Now notice that we're getting very close to the price action with those dots. But we don't want, okay, now it touched the dots, but it didn't take us out of the trade because we had an offset. So I'm going to reassociate it. This is actually a rarity. This rarely occurs. Generally speaking, you just set it and forget it. But I wanted you to see this because this price move goes and goes and goes and goes. Oops, there we go. Now, we're still dropping and it's hanging way back, but if we start stalling or even backfilling, notice it's going to rush down and lock in the profit. Getting closer, getting closer. Are we going to get tagged? Almost. Nope. Still going. Ask yourself, would you have jumped out of the trade? And there it is.
Trend loss.
Now watch.
1 minute. New congestion.
Did you hear that? 1 minute. New congestion. So what it did was it managed to get more than the meat off the bone. This was our setup bar back here. This is what we entered off of. We made our money right off of that bar right there. Our first $50. And then we trailed our stop all the way down to here. I would submit to you that this automation managed to get the majority of that price move before we lost the trend, lost it there, and went into congestion. You didn't have to guess where to get out. All right, so let's take a look and see, did we make much money? We risked $45 per contract. I'm going to open up the hidden panel on the right. You may not be able to see it. You can always move the GoToWebinar control panel out of the way, but it says $820. So even if you can't see it, my question for you is real simple. if you could have this kind of automation, this kind of precision, this kind of consistency, and get this 9 out of 10 times, wouldn't you want that? Give me a good response and let me know if you like what you've seen here so far. Give me some feedback, folks. Not just George. Okay, thank you very much. All right, so what I'm going to do now, all day, says Lou. Yeah, absolutely. I'm going to go back to the presentation. We're going to finish this up here. I don't want to keep you all evening long. And we just got through looking at that sample trade, and it illustrated how a trend following system can be your safest and most profitable way to trade. I know there's breakout approaches to trading from congestion, but you get fake outs. I know there is counter trend trading. That's like stepping in front of a moving train. Trend following has been for literally hundreds of years universally accepted as the easiest and safest way to trade. But we're going to take it a step further. We use those tuned cycles-based multiple time frames or charts that have very specific settings based on the market that you're trading to enable you to determine the strength of the trend. Once you know that strength of trend, you can adapt to what's possible. And just like I did in my illustration, I adapted. I could have scalped. I had a small enough risk. You know what the risk level is? I didn't mention that earlier. The maximum you can lose on a scalp per contract is only 70. And if that bar, the setup bar that I was using for that trade, was smaller, the risk would have been smaller. If it would have been bigger, the risk would have been bigger because it's the distance between the red line and the entry, the stop and the entry. So the range of your setup bar dictates your risk. That's how you can actually have very small risk trades. Scalping, you'll lose 70 or less when you lose. Scaling out, never more than 100, typically less, as you saw in that example. Okay, this lets you keep your risk under control, which I know we hate losing, but if you gotta lose sometime, at least make it a little bit, okay? And you saw the automation. That is just, it goes without saying, it takes the guesswork and everything out of trading because this is a true Boolean logic, rules-based mechanical system. It's just a flow chart that's been automated. That's really what you got. You will have absolute precise signals walking you through the 4 steps to get into a trade. You got to have trend agreement. Just look for the colors. You got to have a pullback to the moving average. Just look at the readout. You got to have oscillator confirmation. It's either overbought or oversold. And you got to have the risk. Never more than 100 for scaling out. Never more than 70 for scalping. When those 4 conditions are met, when that bar is just about ready to finish, park your order and expect consistent returns. That's exactly how it works. So I'm going to give you a real roadmap to making this work, not just the software, but a full plan that you can follow. No, you don't have to read all these details. And no, it doesn't take 90 days to learn. I taught an 8-year-old kid how to do it in less than a week. So yes, you can learn it at your own pace, far, far less than 90 days, but I give you all that much time because I want you to know that you have full access to me and not just in the trading room. I call it a coaching room rather than a trading room. You can have full access to me on the phone. That's right. Nobody else does that either. Oh, yeah, one more thing. When you're in the trading room, if you're really not sure if you're doing things correctly and you really want that assurance, guess what? I can look at your charts as you take your trades. I have that ability, and I can coach you through any problems that you're having to assure you that you're doing it the right way. Because my goal when all is said and done and you've been benchmarked, is I really want you to be at the level of a professional trader. I want you to be high on the food chain, not low. And that will enable you to reliably and safely cash in on this economic explosion that we are getting right now. So if we add up all of the wonderful bonuses and benefits that you're going to get, let's walk through them real quick. You know, trading systems, you're going to hear vendors out there call their approach a system. It isn't. There are actually on the planet maybe 6 or 7 true mechanical trading systems available for the retail trader today. That's it. And they start charging you at around $3,000 and go well beyond $10,000, and they don't even give you anywhere near all the other things you're going to receive from me. No, I'm not going to ask you to pay that kind of money. I'm just showing you what's out there. Even if I charged you the low end $3,000 and started there, you get me as your personal coach, both in the trading room and offline. And when I consult with corporate clients, I bill and receive at $500 an hour. And you've got full access to me for the entire duration of the course. Now, in the password protected members area, and by the way, all of what you're going to see here tonight is available to you for life. I will not charge you a renewal fee or a lease or anything else. This is yours for life. So once you get into the password protected members area, you're going to start using a step-by-step, just like going to school, freshman, sophomore, junior, senior, going through all the various levels, taking quizzes, and you will watch training videos, you will read some things that are copy, and of course, you will receive our software that plugs directly into the NinjaTrader platform. That's what our system is written for. And NinjaTrader is absolutely free when you are practice trading. They don't charge you a penny for it. They only charge you when you start trading, okay? And if you buy a lifetime license, which is really relatively cheap, then you'll never pay another dime ever. And by the way, the data feed, once you start trading, the data feed is absolutely free. They eat it. So the value of my templates and the workspace and getting it all set up, that's included. It's a real simple 5-minute installation. And by the way, if for any reason you get hung up on that, I've got a full-time support desk. I'm not a one-man band. I'm a full corporation with a staff, and you will have my guy remote access into your computer and support you in getting that installation completed if for any reason you need it. Okay? Now, you saw how my trend indicator worked, and it talked to you. It showed you when you were in a trend, not in a trend, and all the variety of conditions. You saw the 4 steps that take you into a trade and all the proprietary indicators that have to be fulfilled. You saw one of 3 exit strategies that are automated, about 95% worth. And during benchmarking, my students, over the course of about 30 trades, they typically generate about $3,000 to $5,000 worth of profit. And that gives them a strong indication of what they can reliably expect when they go out into the real world of trading. And of course, when you're in my coaching room, I record and archive everything, just like I'm recording this tonight. You will have everything that are recorded. That's my charts, your charts. Whenever I share your desktop, anything you or I say or another student says, I've got years and years worth of archived recordings, and you can go back as far as you want to go. So it's all there for you. Now, I want you to really run this like a business because I don't want you to be an amateur. If you're going to run it like a business, you got to have a business plan to start with, not just for all those pie in the sky financial goals. I want you to be able to put guardrails on your trading. Like, what are you going to do if you lose too much money? Well, what is too much money? You got to say how much is too much each day or a week or a percent drawdown. Or what do you do if you got 2 or 3 losers in a row? You must put it in writing. I have a pre-formatted business plan. You've got to complete it. I read every one that is submitted to me, and I give you feedback if necessary. Now, to ensure that you continue running it like a business, remember I mentioned that along the way during the course, you journal every trade. You're going to keep doing that after you graduate because you want to continue learning from everything you do. And you got to be able to track all this performance. You got a macroed spreadsheet for your stats. So that's included. And last but not least, we got to keep those emotions under control. You don't want to overtrade. You don't want to have analysis paralysis. You want to stop that self-sabotaging behavior. Well, this tool that's included is going to help you do that. If you add everything up, we got nearly $11,000 worth of realistic value here. Now, I'm obviously not going to ask you to pay that. That's too much. Normally, what people are paying these days for this entire package is $39.95, but I'm going to give you a very special limited time offer until midnight Pacific time of Wednesday next week. So Wednesday of next week, it's going to go back up to $39.95. But until then, instead of that, it's only $19.97. And if you want to know if you qualify, you will want to talk to me. And that's why you'll get a link in the emails that follow up, not just to watch the replay, but you'll see my scheduler and you will pick a time that works for you. And you and I can visit and you can get all your questions answered without any pressure from me whatsoever. I don't do that. I will just make sure that you are comfortable once it's over so that you can make up your own mind. I'll respect your intelligence. Oh, what a revelation. Nobody does that anymore. And I know some of you may still be going, 1997, I don't know, I've never paid that much for anything. Some of you may have paid much, much more for other things and really felt burned. But wherever you fall, I have a payment plan, actually several payment plans available. And I'll explain that in just another minute or two. We're almost done. So I want you to take a full week. I'm not going to ask you to push a button and make a decision right now. I really do want you to think about this. Schedule time. Visit with me. Be really sure this is what you want because I want you to succeed. I totally want you to succeed. Now, if you want to jump to the head of the line, you don't want to wait for the email tonight with the link to schedule time with me, you can jot this down. daytradesafe.com/apply now. And that will show you my scheduler. Don't leave now and do it. Just wait till we're done. And that way you will be able to pick something that works for you. And what happens during the time we're on the phone? Well, you're going to get a full hour of my time, so please do keep that appointment. Don't not show up because I'm taking an hour out of my whole day just for you. So book that pretty quickly because things do fill up pretty quickly. And I want you to know that you will have locked in that discount, even if things fill up. And the first time you can get is after the deadline. Maybe it's Thursday or Friday of next week instead of Wednesday or sooner. I will still honor the discount because you made a good faith effort. But you're going to call me. It'll provide you with a phone number. And as I said, please do keep the appointment. It'll be a really valuable conversation because you're going to not only get all your questions answered about TradeSafe, you will also use me to help diagnose any problems with your trading, even if you decide not to go with TradeSafe. I don't put any strings on it. Okay? Because my goal is really your complete confidence in your relationship with me. Now, let's talk payment plans. The one that I recommend the most, if you don't want to just use your card, most of you will just use your card and say, good, I'm going to just get started. here is something that is very tempting. If you live in the United States, this is not my policy, it's PayPal. It's their policy. They say that if you click on their button, and you'll see that when you finally get to that page, a little later on after you finally go through everything, you will see one of the choices that says PayPal credit. It's basically a loan, and they will give you 6 full months to pay them back. If you pay them back in 6 months, they won't even charge you any interest, which makes it very attractive because a credit card will charge you interest. So I highly recommend at least checking it out. It's a soft credit check, takes a couple of minutes, and it's essentially free money. It'll enable you to finish the course in plenty of time, start trading real money, and start paying it off very, very quickly without even being out of pocket. That's what I would recommend. Now, if that's not a fit for you or you're not a U.S. citizen, we do have other payment plans available. We do charge interest, but we're trying to be flexible here. But either way, do remember to book that call and discuss things with me. Make sure you understand, especially if you're saying, I don't even know if I have time, Michael, I got a job. I've had people who have full-time jobs, who even live in Australia, around the other end of the planet, who have successfully completed this course. So there are flexible ways to approach this, but there's just not enough time to go into it tonight. So make sure if you've got any question, don't just dismiss this out of hand. Do talk to me. Use this link to schedule, daytradesafe.com/apply now, and pick the best date and time that works for you. It fills up fast. You won't be pressured. And do remember to watch the replay before you call me, because I can't recreate the webinar on the phone, okay? Now, there is at least one person every time who says, I don't need to talk to you, Michael. I'm ready. I want to do this. If you're really ready now, write this down, daytradesafe.com/I want in. And there's no spaces there. I want in. And that'll take you directly to the sales page, and you can just join TradeSafe immediately. So we are wrapped up right now. Give me some feedback and let me know if you got some value out of this presentation. I'd like to know if you felt that you learned something. And I want to say thank you very much for taking time out this evening. And if there are no further questions, then I am going to close the room at this time and say, trade safely. Bye-bye.